Happy, let's call it bond market closed day today, everybody. It's Monday, October 13th, 2025. We'll start with our headline: When Valuations Get Extreme, Beta Wakes the Dragon. The reason I bring up this topic is because Friday's move down in the S&P 500 by negative 2.7% seemed really extreme. However, in an environment where the stock market is extremely overvalued by any kind of historical standards, moves like this shouldn't be all that surprising. And I'm not expecting the volatility to be over here. Over the weekend, Trump came out and backed off a little bit on the China tariff threat thing. And apparently we may be headed towards peace in the Middle East. Today's inside bar was anything but a confident move in stocks. Maybe when the bond market opens up again tomorrow, we may see a little bit more of the true colors of the market, let's say. But if the Trump bad news drove it down like that on Friday, and then the Trump good news only got this little minor bounce here, it tells me that this fall is not over. And while we're on the subject of high beta or higher volatility than usual, gold went up another 2.33% today. Not only can you get more sort of beta from stock like extreme valuations, whether it's way over normal valuations or under, gold, it doesn't work exactly the same way, but it does work in the way of terms of momentum. When you have this strong, this fast of a move to the upside, you can very, very easily get just as fast of a move back down. And yes, gold can keep going higher, maybe even at a faster rate. Remember how fast gold moved to its peak in 1980, from 600 to 800 in a week and a half. Gold in my book right now is not for the faint of heart. One way to illustrate this sort of higher beta environment that we're in is thinking about Drakmar. When he gets overheated, when he gets really hot, he's gonna flap his wings harder. He might be, more likely to blow some fire. Equally, when he's really freezing cold, he's more likely to get agitated. When the temperature is normal and things have, we get to our moving day averages, we get to historical normal valuations of any kind, that's when we should expect a little bit more security in price movements. Volatility cooled off a bit today too, so I got back into volatility a little bit. I do not believe this volatility is over. For me to believe that it's over, I would have wanted to see the stock market snap right back to where we were before Friday's sell-off, and we didn't get that. Additionally, this chart pattern right here, sorry if it's hard to see with the other lines. I got this purple line here. What do we have here? At the top of the market, a broadening wedge. This is oftentimes a reversal. We could easily have this still be the top, and more easily now that we've seen the bounce, which we retraced like 50%. So hold on to your hat. I think the ride is going to continue, or maybe it's just because the bond market was closed that the markets had to find their neutral space before showing again its true colors tomorrow on Tuesday. Moving on to community topics. Remember, Robschild will be wrong. I'm only bringing this up because while I do appreciate the positive support in the comment section, there is a reason why I have my disclaimer at the beginning of every video. It's not just for legal protection, it's the darn truth. Robschild will be wrong. That is guaranteed, so be careful out there, everybody, with all of your decisions, as always. Coming up tomorrow, we have big bank earnings. So with already heightened volatility, this could be interesting. Take a look tomorrow. Before the open, we have JP Morgan, Goldman Sachs, BlackRock, Citigroup, Wells Fargo, all coming out with earnings. And it goes throughout the week. Bank of America, Morgan Stanley, U.S. Bank, etc. We also have Powell speak tomorrow at 12:20 p.m. So we could have markets react to things that he says. It's certainly hard to be data dependent when there's no data coming out. Remember, the economic data, generally speaking, is in limbo. We do not have initial continued weekly jobless claims, nor the recent employment report didn't come out. But we do have on Friday still coming out, the CPI does come out. It's needed for Social Security payments because they use that number to determine what the payments are. So CPI comes out on Friday, and always coming up in the tariff updates, and apparently peace in the Middle East. And of course, the bond market opens again tomorrow. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to my crystal ball ratings. And see my website, link in the description, to read through my daily reminders, current macro views, portfolio explained, and stock research center. All right, back to the charts, back to SPX, the S&P 500. Pretty much the entire stock market looked like this today, with the big red bar from Friday and just a little inside day. This is currently more bearish than it is bullish. This is also at a all-time high with, like I said earlier, a expanding wedge, which can easily be a reversal. If we start cracking below this purple line here, watch out below. I think it can go a lot further. And if that happens, I'm not sure they're going to be able to say anymore that it's because of certain tweets by certain people. In addition to most of the stock market looking like that, we also had crude oil showing the same pattern, with Sunday futures and today's candle being an inside day of a large red candle. This is typically bearish. Oil appears to want to fall further from here. And the upside down in the VIX with a small-bodied candle inside of a large green candle from Friday. This is typically bullish, so volatility appears to want to go higher from here. And even in crypto, including Bitcoin, very similar. This is a 24-hour market. If it wasn't open Saturday and Sunday would look the same with an inside candle here from Friday's move down. Very similar to the S&P 500 with about a 50% retrace. The next chart that caught my eye today was the dollar index DXY, appearing to maybe be forming a consolidating bull flag. That's what it looks like to me. It would make sense after this inverse head and shoulders to get to the target. Another market that caught my eye today was copper, which did retrace pretty much all of the Friday's sell-off. So maybe Dr. Copper knows something that the rest of the market doesn't. After all, he does have a PhD in economics. Overall, sort of a boring day in markets amid chaos, I guess. You really do need a crystal ball to guess what's going to happen from here. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.